I'm Dan Fitzpatrick at StockMarketMentor.com on Thursday, September 12th. And I want to look at a case of what I call the can't help it's. When traders get a bad case of the can't help it's, what I'm talking about is they look at a stock, they know it's right, they know they shouldn't buy, but they just can't help it. And so finally they do buy. And what happens? Well, the stock tops out and it drifts lower, and you're thinking, well, I knew that that was going to happen, but I just couldn't help it. What I'm suggesting is just don't do that. There's a couple examples here, a couple great examples here in the shipping stocks here. Look at dry ships here. See how this stock was in, it won't quite call it a volatility squeeze, but it was trading fairly tight. Okay, that was at a little over $2. We'll call it 210. Then it broke out, ultimately has run clear up to 325 before pulling back. So as this stock breaks out, you know, it's okay to be buying it a little bit, you know, a little bit here. You're not going to, most of the time anyway, you're not going to get the stock right at the ideal buy point, but you can get it pretty early if you're watching it. But what happens is traders may not see this move. You don't see this little pullback. What you see is this move. Right about here you start picking up on that, and you say, man, I was looking at that stock right when it was back here waiting for it to break out. It never did. I lost sight of it. Oh man, what a dummy. So you go ahead and buy it here or maybe here. You're looking for more. Maybe you wind up making a little money on it, but probably not, because guess what? Guess where all the volume is? Okay. All the volumes on this last up day, and then the big old bearish engulfing pattern, the big old reversal here. So this was definitely a climax high that you had to kind of see coming, if by no other way than looking at how extended this was, not just above the 200-day moving average. I mean, 200-day moving average is at about like $2 or so. Stock's up at over 3, so it's over 50% extended above its 200-day moving average. That's not the thing that should really make your hair stand up. It's the fact that it's so far extended above the 50-day average, which is the faster indicator here. So even on this 50-day moving average, the stock is really extended. Now let's look at DSX. It's a little different type of trade. This isn't, I mean, guys, this one was parabolic. Looked like a short squeeze, but by the way, here's the short interest. So really wasn't a short squeeze. This was some kind of buying here. Now, Diana Shipping is a different deal. It was trading in sync for the most part with dry ships, but it wasn't so. It hasn't been so extended. And so here's the deal. On Diana Shipping, this is the stock that I would be more interested in buying on a pullback. Not so much dry ships, just because the stock is still so far extended. So with Diana Shipping, you know, Kramer covered this a long time ago, I think like back in March, somewhere around in here. On Mad Money, I showed him my work and suggested that it had a minimum price target of $14. It hasn't quite hit that yet, and it may not hit that, although I think it will. But what you want to do is wait for the stock to pull back. Where has it bottomed before? 20-day moving average, 20-day moving average. Even fell a little below here, but you can see how the real time to buy this stock is at the 20-day moving average, which right now is about 1150. My bet is you're going to get a test of the 20-day moving average sometime within the next couple of days. So you want to wait until you see the first open bar. In other words, like the clear green bar, the open green bar. What this indicates is that the stock opened low and closed higher than the open. That tells you that there's been a reversal. Like you can see how the stock trended lower here. All these red boxes. And then the first open box here, that was the buy point. Then you get a move up here. So you're going to look for this over here, and that's really when you'd want to be looking to buy with a stop an appropriate stop underneath that established support level. So anyway, that's Diana Shipping. Guys, over on the strategy session, I told you this is more of a stock picker's market as opposed to a kind of a sector-driven market, and that is true. So we're going to be going through, about 20 stocks. A lot of them are working really, really well. Remember, it's not, the most important thing is not just being in stocks that are going up. The most important point is being in stocks that are going up steadier than the others. Those are the ones that you want to be in. So we'll talk about that on the other side in the strategy session.